Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, September 2nd, 2022. Just want to start out with a quick reminder. We're heading into Labor Day weekend, so the stock markets will be closed on Monday, equities, and we'll see what the futures do. But you do have, of course, especially as an equities trader, ETFs and stocks, you have an extra day of overnight risk. Just keep that in mind. I'm sure you heard the buzz. September historically is a pretty bad month, especially when during bear market time. So now, with that being said, I'm going to go over the charts. Near term, they're very constructive and bullish. You guys know my thoughts. I'm not going to beat a dead horse on the indexes, but I just will reiterate and show you some targets again, how things look. So this is yesterday, QQQ made a, this is what I call a solid, breakout impulsive. You had a 60-minute close, pretty decent close above the wedge in QQQ, as well as NQ and ES, then a follow-up candle. That was yesterday. And if I turn on the pre-market trades, we'll see here, you can see we've carried up now and hit on QQQ that first resistance level, which is a back test of the trend line. So all the better if QQQ can power on through that trend line. Remember, I had dragged it and drawn it a few ways. I have different boards that show it in different levels, depending on which candles you capture. But either way, it still looks good. The breakout was solid. Everything looks good. And then let me show you the futures real quick. There they are. This is the hourly chart. Remember, I gave you yesterday two charts. The ones I threw out this morning and yesterday morning, the first time around, were 2-hour candles. I also have 1-hour candles. They might have some different levels, little micro levels to trade, but we'll just stick with those targets on the 2-hour candles right now. We'll go 1 month, 2-hour. That's the one I gave you there this morning. So there it is. See, we had that little pop this morning pre-market. They faded it because they couldn't get a big pop in pre-market, and we did come back close to that level there. But I expect we'll power on through. I don't really see much in the way. Some minor resistance there at 12,451. But either way, let's just keep it simple. Those are my targets, and I think there's a good shot at this trend line. Now, here's the thing. Are we going to hit that trend line today? Let me measure it from where we're at right now. The opening bell will be in about 8 minutes. So here's where the futures are trading. And that's going to be a heck of a run because we're already up 1%. So we're not going, most likely not going to hit that today. 4.5% upside. Anything's possible. I'm long and strong right now, and I'll tell you if nothing else. Remember, I went over that SQQQ chart yesterday and showed you there's a lot of trapped rats that want to jump off the ship right now that were, especially SQQ. See, on futures, you can watch them overnight and you can have your stops hit, SQQ, and you can even have stops hit in the regular sessions. Trading individual ETFs and individual stocks and ETFs to me is a pain in the ass, especially in pre-market, because you can use a stop limit order, and stop limit orders get bypassed. There's not a lot of liquidity in the pre-market session, and if you have a stop limit order, say at $20 and there's no execution at that price, it'll bypass you. Now you can have a stop loss order. I don't even think they let you use those in pre-market anyways, and that'll just fill as a market order once your stop price triggered. So learn the difference, know the difference of stop loss and stop limit orders. They each have their pros and cons. But then the futures, you have liquidity. You can use stop loss orders, and because they're liquid, you don't worry about that. I'll use stop loss orders instead of stop limit. I just stop limit, like I said, you can get bypassed on that, and then your stop price was hit, but then you're still in the position because your limit order, there wasn't an execution to be made at that price. So a little, pretty important difference there, and learn that. So all right, there it is, and that's NQ. And so today, I think we could carry on up to maybe that downtrend line. That was a little neckline of the head and shoulders, and there's a little reaction right here, reaction high. We'll put a level there. We'll play it by ear, and again, I'll make a decision myself whether I want to take anything home over the weekend or not on a 3-day weekend in September. But I'll let you know. Anyways, so that's it. I just added a level there, about 12,650, we'll call it. So it's really 12,653, but you always want to sell a little bit below the resistance level. You expect a reaction. There's ES. This is the hourly chart, and we're at that first target. Again, you can see right there about 413. Nice resistance. So opening bell hits, I'll probably sell off a little bit and pull back, and then you can buy a dip back to you look for these reaction highs and Who knows? Maybe they pop it if there's a lot of shorts that are getting squeezed out, and maybe we don't get much of a pullback. But I'd still favor, more upside today to at least that level there, about 40.73, and that's ES. That's the hourly chart. And then RTY, for small cap traders. I think they'll have a little game of catch up to play today. Usually after a big drop like this, everyone's buying the beloved tech names. So, I'm overweighted as I usually am, the NASDAQ 100, and then I do have a position in RTY as well. And this is a nice little 60-minute chart, beautiful wedge. Again, these wedges were just, I use the term beautiful, to me, like technical analysis is like artwork, when you have a nice setup, very nice support there. That was where it was mentioned as a buy at 1792. There's a wedge breakout, first target hit there, their second, third, and I could certainly see us just like ES and NQ carrying up to those downtrend lines. That would be a target most likely to be hit next week. So if we gap up on Tuesday, or the futures trade on, overnight, Globex futures will trade when usually during the holidays. So you can watch those Sunday evening, Monday. They usually have abbreviated trading schedules, but there's still some trades to be made then. All right, that's the indexes. I just want to say to be right and long the indexes is to be long and bullish crypto. So there's Bitcoin right here, BRR, Bitcoin futures. I should roll this. I've been trading Ethereum lately more so, but these contracts still trading. There's a little breakout right there, trend line. So you're going to look at most likely some nice upside. I'd say at least at minimum about another 3% today in Bitcoin right there. Let me show you Ethereum real quick before we get the opening bell here in a few minutes. Nice move up in Ethereum. This is one that's probably going to rally with the market, because remember, crypto's been risk on, risk off. There's said get out. We got out of our equities, or short equities, most of that ride down, and short Ethereum, and then positive divergence. And if it can pop this level, it's at it right now. It's testing it 1637, which I think it will. You've got a reaction high right there that may come into play, but I think we can carry up here to about 1806, and that would be if hit, assuming it's hit. That's about a 12% rally up there, give or take, to 1806. But again, you've got a reaction high there. I'd be remiss not to put a line. And the way I trade coming into 3-day weekend, we'll see how today goes, and if I have if we continue to build on these gains, anything's possible. They could fade the heck out of this rally at the open here in 2 minutes, but and then never buy it back up. Remember, that's a signature of a bear market too. Bear markets are sneaky. Just when everything looks good and you get a nice setup, that's when the bottom falls out on you. There's an uptrend line if we pull back in Ethereum, by the way. And this is ETH, USD, Ethereum futures. If you trade the raw crypto, that's ETH right there. And you can see, again, beautiful. That one just took out that downtrend line. This is Ethereum. There was your divergence right there. So there's your that same level right there, first level, and possible likely target up there about 1825. And I encourage you, I always say this, encourage you to read the site. Come back in, read the responses, the questions that other members post. Sometimes I'll follow up. So somebody asked about these jobs report today, and tough to buy into the market ahead of the jobs report. I've always said this: if I sat there and I never traded every time there was a Fed, someone's going to speak at the Fed, or there's a Fed meeting, or a jobs report, or GDP, or there's reports nearly every day that come out, and I've always maintained that. Not always, but much more often than not, if the charts are constructive and bullish, then good news is good news and taken as such, and bad news is just either completely just shrugged off, dismissed, or sometimes even spun to be good news. I've seen that time and time again. I can almost write the headlines. And so in this case, it's funny how, and that's what I said here. When the technicals are bullish, good news is received as good news, bad news is dismissed or spun. Obviously, vice versa on downside when you're in a bullish trend. So here, a strong jobs report, as you would imply, would increase the hawkish case for the Fed, which would be bearish for the stock market. If so, there are more sellers and buyers, blah, blah, blah. But, the job report could be the catalyst to take out the lows, but it wasn't. And so I almost got up this morning because I said could go either way, but I'm leaning towards the latter, that it's going to trigger a rally. And early this morning, I had in my head the word Goldilocks. I just had a feeling that it might come out to be a Goldilocks number, and sure enough, turned on the TV just to hear the job number, and that's what they're talking about. It was the perfect jobs number, right? And so the futures shot up in pre-market. And I think we'll see some carry through, unless I always got to look at both sides of it. You don't want to see a move much back below 12,225. Obviously, you don't want to see the lows taken out because this was a big level. It's not shown here, but remember that was to me a very big level. We had that uptrend line support on ES. We had key Fibonacci retracement levels. That was yesterday's lows. Big support, kind of line in the sand for me. So right now, like I said, charts are constructive. We'll see how the day ends, and then if things still look constructive going into the end of the day, I'll probably take maybe some longs home, but maybe a small amount. But if we can hit some of these targets, I'd feel more comfortable reducing quite a bit, maybe even all exposure to the equity markets. So, all right, opening bell just rang, and like I said, we opened right into resistance on, what did I just show you? Was it ES or one of those? So you probably get a little fade. Here, I'll go back to a regular chart. 1 second here. QQQ right at that trend line. Here's SPY, SPY. That's not it. There's SPY. There's a little level. I don't have it on this chart. You can see right there. Reaction low, reaction high. And so we need to power through that. Oh, and then besides that, the comment about my expectations would market would rally regardless whatever the jobs report is. It would be the catalyst for some more upside today, and that all has to do with those wedge breakouts. They were beautiful. I mean, that again, look at that. Look at SPY. Solid. That's a solid 60-minute candle, impulsive, solid close, big volume, follow through candle, and now here's today's gap up. So again, any pullback, we're at resistance. If we pull back to 396 or a little bit above it, that'd be a buy, and then hopefully we get a swing up here. Probably again have to carry through to next week because it'd be a heck of a move. We're already up. What are we up? Well, we're only up 0.7%. Let me see if we got up there today. Yeah, it'd be a big day. It'd be almost a 3% day. I don't know. Maybe anything's possible. Oh, let me get back to what I was getting at. Okay, so if you're interested in Apple, somebody asked, and I just caught it. It must have asked last night or something. Targets on Apple. So Apple. There's an Apple chart. You can go here. Let me pull up the live chart. You can go and check it in the comments section. But these are the kind of things I'll put in there. And Apple's obviously everyone's crowd favorite, so I'm glad to provide targets on that. And I also always want to align my analysis. So there's that first target I gave right there, 159.62. See, resistance. So this is why you gap up, you open into resistance. You're going to get a little fade. And here's let me show it in QQQ. This is that fade of the pop. So when you gap up into resistance, pretty good gap, you're at least going to get the initial selling, and then they'll step in and buy here, and then they'll take the next leg up. It'd be my guess how I'm trading it. But we'll go back to Apple so you can see those targets, and this also would align with the market. Remember, Apple is to a big extent the stock market. You've got a downtrend line there as well, and so there it is. There's a potential swing target. T1 hit. Get a little reaction here, power through. Next one's T2 zone. When I have two resistance levels in very close proximity, it's 162.53 to 163.52. So 1 point range on a 163 point security. You're talking almost, just under, just over 0.5% range. That's second target. So go up there. And then you're also back testing that trend line. See, that's the thing about Apple. That could be it. And my response in that chart I gave, if you read it, I'll have more visibility next week. As of now, if that's hit today, I'd be out of Dodge. Get that money and run, take that money and run. That'll also coincide with a pullback in the stock market if hit. Otherwise, we could carry up there. But then see that downtrend line? This isn't mere coincidence. Apple, the world's largest company, publicly traded, the biggest component of the S&P 500 or the NASDAQ 100, has the same identical downtrend line as QQQ and SPY and all that coming off the highs right now. I'm just grabbing lines here and moving them. Busy chart, but there it is. It's already drawn. There's the downtrend line. Well, I'll draw it. You can draw it this way as well. So that's it. So that's bounce targets would be those trend lines. If this breakout fails and we go down hard, man, that's going to be pretty darn bearish. I don't think it's going to happen, but you have to recognize where you're at in the bigger picture, and I believe we're still in a bear market, and I believe this was the end of a significant bear market rally. I maintained that before we even got there, and then once we did, that's that. So, yeah, just be flexible. That's the bottom line. Be flexible and don't be married to any one thing, even though these are beautiful little wedges and they should carry higher. There's no guarantees. Alrighty, a couple more trade ideas for you. I already covered crypto. Crypto goes with the stock market. And then I'm liking bonds right now. Just loaded up on a bunch of ZB. And this is ZB, and I'm going to give you the ETF alternative as well. That's TLT. And I've highlighted this recently. We have a downtrend line working. This is a 60-minute chart of ZB. ZB is the 30-year Treasury bond futures. Like all futures, they already come chock full of leverage, so you don't need to buy as much as you do. You want to make a good buck on TLT, you got to leverage up, because in Treasury bonds in percentage terms don't move nearly as much as the stock market. But look at that beautiful price channel, right? And then nice, decent support right there. The channel's been diverging slightly. You can see prices falling and pretty much equal or slightly higher highs. At bare minimum, I'm ride back up to the top of the channel and most likely a breakout, and then up here 137. And again, if you trade Treasury bond futures, I don't have to tell you, a 3% move or close to it, 2 3/4, is a pretty nice trade on CB. TLT for you folks that don't trade futures, and there's also a leveraged variant. Just Google the leverage one. I forget the symbol right now. It's TLT, but with 2 times leverage. There's your divergence continues to extend there. There's that channel. Oops. Try to move that. Trying to move this line and show you that's the price channel I just showed you on ZB. And it's a little bit, yeah, I'm going to have to drag this line here. See, it's not as clean as the futures. I like, again, the futures are the way to go. That's where most of the the institutional traders, professionals, are going to be trading the futures, and retail traders usually trading this. But there's a big old gap. I think it could carry back up here at least to that level right there. And I really also like the short-term bonds. Now, on shorter-term bonds, a long bond, you have more. It tends to move more in percentage terms because you have a higher duration. That's what it's called. And the duration is how much a bond will move in percentage in relative to a change in 1% change in interest rates. So when you go down, the shorter-term bonds are less volatile. But look at this is ZF, the 5-year. Treasury note. Look at that beautiful little pattern here. Nice downtrend line. And this thing just trades like a champ to the technicals. There's your price channel. Already shot up today since I meant to highlight it here earlier. There's your nice positive divergence. This thing should break out and run. You've got one little stop here. You got a reaction low that'll probably come into play, but otherwise I think we can get a nice rally into next week in treasuries. And there's my target, 112.068. We're just breaking out right now. And just look, look how well this thing trades to the technicals. You see that nice little, what is that, positive divergence, 60-minute chart divergent low. You get that trend. Hold, stay long and strong till you get the divergent high, and usually there's going to be a sell signal, little trend line break, and then you get a correction. Then that sets up in a bullish falling wedge. There it is, not all drawn in here, positive divergence. Boom, there's your breakout, you go long. Then you wait and you got a bearish rising wedge with negative divergence, you go short. You can sit here and trade this one security over the last couple months here with these clean, high probability buy and sell signals and divergences and all that. And but I like to mix it up. Little treasuries here, little crypto, commodities, whatever else. All right. Let me just end it there. Like I said, remember natural gas. We'll probably not know until after the weekend because Nord 2 pipelines scheduled supposedly to start pumping on Saturday is what they said, unless anything's changed. That's what I read yesterday, and my guess is it will open, even though there's a lot of skepticism that it won't. And then boom, natural gas could really fall hard. But we still have that level. Still needs to take out these recent lows, like I said, to trigger the next sell signal. But we did already, break down below the primary uptrend line right there in that big wedge pattern. All right, so let's just wrap it up here, and we'll see how things go. We'll see if they fade in the pop to the open so far, as expected, because they hit resistance. I'm talking about the stock market, and we'll see if they step in and buy, and then we'll see if we can build on today's gains. But like I said, don't be married to anything. Right now, 1 to 10, the price action of just in a vacuum, 60-minute charts is a 10. But then what always formulates my thinking and my analysis is when I go to the weekly charts and I look here, and this is QQQ, hit my third target, bounce up, hit my bounce target range, which was these 200-day moving averages and that downtrend line, all in that area, a little hit it to the button, reverse, and it's been impulsive so far. And so this could be, we could be in the beginning stages. And the nature of those impulsive legs down, if that's what this is, so far it's certainly started out that way. We haven't seen impulsive selling like this since that wave down right there. And the nature of that is it's got to trap longs as well. I've been talking just lately, as of yesterday, about shorts being trapped with that SQQ and shorting, Johnny come lately shorts here, and they'll, I believe they'll be squeezed out today, but could be the longs that are taking this breakout, and again, it's going to be, bear markets are wicked to bulls. They're just outright mean. They'll give you a nice setup like that, and then, like I said, Monday or Tuesday, I'm sorry, we're closed Monday, so Tuesday morning we could open with a massive gap down that would trap a lot of longs. So that's why, like I said earlier in the video, you may not want to go aggressively long or short into the weekend. You can always pick things up and see where we're trading, next week. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.